starting a new chapter?
Yeah, this is a new chapter, incomplete records.
Okay.
Whatever is in between, that will be taken care of by sir.
Okay, ma'am.
Okay. So see, first of all, I'll give you some brief introduction of this incomplete records. Basically, we know that when we prepare accounts, we prepare account as per double entry system of bookkeeping. Okay. Now, what is double entry system? That means everything is properly recorded. Okay. Each and every transaction is recorded. We will put every transaction into every event into transaction and record it. Okay. But like for and definitely when we record everything, definitely we have to keep some executive and that executive needs to be paid. Okay. So there are expenses with regard to this particular recording. What if a business is a very small business? So for small scale business, for small size business, what happens? Like they don't have to disclose anything to some outsiders first and foremost. Okay, the business is very small, so definitely earnings might be also small. Okay, so these kind of business they can't afford this executive and to record each and every transaction in detail. Okay, so in this particular scenario, for them, particularly for them, this incomplete records is a helpful thing. Okay, so this incomplete records come to the rescue for those particular kind of businesses which are of small size, where public are not substantially interested, where this particular business doesn't have to give any kind of disclosure to any outsider and so on. Okay, so how this particular kind of thing works we will study in this lesson. Okay. So first and foremost, like at the end, like we know the reporting period is a period of 12 months. Okay. So right from the beginning till the end, when we have conducted a particular business, at the end of the reporting period, be it any business, small or big, at the end of the reporting period, we just want to know how much is the profit or loss incurred by the business. Okay. So at that moment, we have to maintain certain records so that we can actually know about the profit element or the loss element. Okay, so this incomplete record helps in that particular scenario. Like, so first of all, what is the issue? Issue we have discussed that individuals who are running very small businesses like grocery shop, so they may not keep all the accounting records, which we have studied till now in detail. Okay, which is as per double entry system of bookkeeping I just explained. They still need to know, but at the end of the year or reporting period, they need to know how the business is performing, and that's the reason they will prepare financial statements. So when they will prepare financial statement, they require certain information. Okay, so that information which is not maintained by the business, they need to derive it from other available information. So how to derive that information we'll get to know here. First of all, like cost structures are of two types, we can say. Cost information can be found in two ways. One is margin, another one is markup. Okay. Remember, margin is always expressed as percentage of sales. Okay. Like when we say a margin of 25%, that means we will calculate 25% upon sales. So here example is given, if sales is 100%. Cost of sales will be 75%. That means 100 minus 25. And gross profit will become 25%. So here gross profit is expressed as a percentage of sales now, because 25% of 100 is only 25. So 100 minus 25, we know cost of sales is sales minus gross profit. So 100 minus 25 is 75. So remember, this margin is always expressed as percentage of sales. When we talk about markup, that is always expressed as percentage of cost of sales. So that's the difference. This is percentage of sales. This is percentage of cost of sales. So here, suppose when they say that the business has a markup of 35%, that means cost of sales is to be taken as 100%. Here sales is taken as 100%. Here cost of sales is taken as 100%. So 100% upon 35% upon 100 is definitely 35. So gross profit is 35, and we can say in that scenario that sales will be, now sales is found as COS or cost of sales plus gross profit. So that will be 100 plus 35, 135. Now previously also we have read cost of sales formula is opening inventory plus purchases plus any purchase expenses also, like wages and so on. Okay, direct expenses. So opening inventory plus purchases minus closing inventory is cost of sales. All these things we have to remember. So here one cost of sales has been solved also. W company has an average of profit margin of 40%. In 2017, sales total is 476,000. So they are saying profit margin of 40%. When we use this word margin, that means sales is to be taken as 100%. Okay. So definitely cost of sales will be how much? 100 minus 40, because profit margin is 40, that will be 60%. Okay. So when sales figure is 476,000, how much will be cost of sales? When 100% is 476, what will be 60%? So 60% will be 476,000 divided by 100 into 60. We can find it out. $476, that is 285,600. Did you work it out, Umayya?
Yes,
So we are getting the value of cost of sales. Now we have to match it with the correct answer. That option is not given. Now next activity is with regard to calculation of purchases. So Y company operates with a standard markup. So here they are talking about markup. So as we have seen, when we are using the word margin, that is 100%, sales is taken as 100%. Here cost of sales will be taken as 100%. So definitely sales will be how much? 130%. Okay. So sales figure, that is 130% is 221,000. Opening inventory is given, closing inventory given. What's the value of purchases? So we have seen in the formula, first of all, we have to find cost of sales. So cost of sales will be how much? We have to find 100%, so that will be 221,000 divided by 100 into 130. Sorry. Say, divided by 130 into 100. We can find cost of sales. So that is 1,70,000. So this is 170,000. So we found cost of sales. Now cost of sales formula is what? Opening inventory plus purchases minus closing inventory. So all information we have got, only purchase information we are unaware, so we have to find that answer. Opening is how much? 43,000. Purchase is unknown. Closing inventory is 47,500. So from this formula we can find X. X will be how much? 43,000 minus, sorry, we can, that will be a negative figure, no? So we can put it like this: 1,70,000 minus 43,000 plus 47,500 is X. So how much is that value? 174,500. Okay. So this is how we got the value of purchase. Is it understood?
No, ma'am, can you please repeat it again?
See,
Can you
in
please
the
repeat it?
information sales figure is given. And when we say markup means we have to take cost of sales as 100%. So definitely sales will be cost of sales plus markup, that is 100 plus 30, 130. Okay. So when 130 is 221,000, we can find cost of sales figure. That will be 221,000 divided by 130 into 100, which makes it to 170,000. Okay. Clear till this point?
Ma'am.
Clear?
Yes, ma'am.
Okay. Now we have to put the formula for cost of sales. So cost of sales formula is opening inventory plus purchases minus closing inventory. We got cost of sales as 170. Okay. Opening inventory is given in the question, that is 43,000. Closing inventory is given in the question, that is 47,500. Take purchases as X and simplify. So we have to find the value of X. So X is 170,000. Put X on the right hand side and all the figures on the left hand side. So 1,70,000 minus 43, this becomes minus, this becomes plus. Okay. So minus 43,000 plus 47,500, that makes it to 174,500. So this is how we got the value of purchases. 174,500 is the value of purchase. Clear?
Yes, ma'am.
Sure.
Yes, it's clear. Can I copy it? I
Yeah,
just
yeah.
need 2 minutes.
Yeah. Perfect. Perfect.
Thank you. Okay, ma'am.
Okay. Next, activity 3. Here we have to find the value of inventory. On 1st January 2017, J Company had inventory of $620,000. Sales for the month amounted to $985,000 and purchases were this much. So inventory value is given, sales value is given, purchase value is given. At the end of January, a fire in the warehouse destroyed some inventory item. The owner salvaged inventory valued 1,80,000. That means this much of inventory was saved. J Company operates with a markup of 25%. We have to find the inventory destroyed in fire. Okay. So first of all, when we say markup, so again, in that case, sales will be taken as, because markup is always on cost of sales. So cost of sales is 100, so sales will be 125.
125.
And
Yes,
gross
ma'am.
profit is 25. So sales figure is given, 125 is equal to 985,000. 985,000. Okay. And purchases is also given. So we can find, first of all, we'll find cost of sales. So how to find cost of sales? 985,000 divided by 125 into 100.
7,88,000.
Good. So that is 788,000. We found cost of sales. Now we can find gross profit also, the difference amount sales minus cost of sales. That is 197,000. Okay. Now, so cost of sales formula again, it will be required here. So that will be opening inventory. Opening inventory is how much? 620,000. Purchases is given in the question, that is 700,000. Plus cost of sales, which we have found, that is 788,000. Now, so add this to figure opening inventory plus purchases, that is 1320,000. From this, deduct cost of sales. Okay. So when we deduct cost of sales, that is 788, we get it as 532,000. So what is this figure? This is closing inventory. Closing inventory should have been 532,000. Okay. But actually it is how much? 180,000. So the difference amount is the destroyed inventory by fire. Okay. So difference amount is 352,000. So this, 1 second, 352,000. B is the correct answer. Okay, got it. Opening inventory
One
plus,
question.
sorry.
Like, are we using gross profit anywhere?
No, gross profit is not required anywhere.
Okay, thank you.
It's not required. Opening inventory plus purchases minus closing inventory is cost of sales. Na? Again, that substitution. So opening inventory plus purchases. From that, we'll deduct cost of sales. We get actually closing inventory this value. But in our question, the salvage value is given as this. That means this much of inventory has been destroyed by fire. Okay. Clear?
Yes, ma'am.
Shall we proceed?
2 seconds. Just 2 seconds.
Fine, fine.
Okay, ma'am.
Done?
Yes, ma'am.
Credit sales and receivables. So like definitely there are two ways in which we can sell our product what if in our business. One is through cash, like at a time of sale we are getting cash immediately, so that will be termed as cash sales. And on credit, so whenever there is a credit we have to record it in receivables. Okay. So we can say that credit sales and receivables are related. Now, if business does not keep a record of its sales on credit, the value of these sales can be derived from the opening balance of receivables and closing balance of receivable and any payment which is received from customer. So see, you are not maintaining any record of this credit sales. Okay, suppose. Even though you will be able to know how much was your credit sale at the end of the year. How come? For that, we will require this information, receivables information. We should know the opening balance of receivable, the closing balance of receivable, and the payments received. That means amount received from customers. From customers, or we can say receivables. So with these three information, 1, 2, and 3. With this three information, we will be able to know about the amount of credit sales. How come? We'll solve it in a sum. So formula wise is also given. If you remember this formula, you can easily solve it. Payment from receivables, that is the amount of payment received from receivables. To this, we will add the closing balance of receivables because this belongs to this year. Okay. Less opening balance because opening balance will be deducted because it belongs to previous year. Okay. This is current year. So amount received plus closing balance minus opening balance is the amount of credit sales in the period. Okay. Now use this formula in this next activity. B company maintains a cash float of $50. What do you mean by float? Float means always they maintain a balance of $50. Okay. Now, in 2017, all receipts from credit customers were banked. That means whatever amount we are receiving from customer, we are immediately depositing it into bank after the following payments from the till has been made. So general expenses payment drawings is this much. Total bankings in the year amounted to 28454. That means this much amount we have deposited in bank. And opening and closing receivables is given. This is opening, this is closing. Based on this much information, we have to find out the value of sales made during the year. So for this, we have to make certain accounts. So petty cash. Petty cash means opening balance of petty cash is given a float. Float is opening balance of petty cash, remember. Okay. So that is $50. Okay. Now, out of this petty cash, how much has been expended? General expenses, as we have seen, that is 4500, and drawings was how much? That is 6250. Okay. Always we will maintain a balance of this $50. So definitely when opening balance is $50, closing will also be $50. That is $50. How much amount was deposited into bank? Some 28,000 something, no? 28454. So banking is 28454. Okay, so this much amount was deposited into bank. That means first of all we have to make a total of credit side. So this total will be 39254. So total is 39254. The same amount will write here 39254. So 39254 minus 50 is the amount which is received from receivable. That will be 39204. So we got one information, that is receipts from receivables. Okay. Now with this information we will prepare receivables account. So receivables account opening balance was given. Opening balance is 1447.
Ma'am, one thing. Sorry. Excuse me, please. Total bank in this year amounted is 28,454, right?
4. Okay, sorry. 450. So this total is anyhow correct. I calculated on calculator. Na 39254. That is correct, na?
I did not calculate it.
Okay, once calculate 4500 plus 6250 plus 28454 plus 50. Yeah, this is correct. 39254.
Okay.
So from 39254 we'll deduct 50, we get the amount received from receivables. Clear? When we maintain a petty cash, whenever we maintain, see, cash book is like this. Debit side is receivables. Credit side is payment. Okay, so receipts are noted on the debit side, payments are noted on the credit side. Okay. I hope you know the format of petty cash and cash book. Huh?
Yes, ma'am.
So shall we proceed to receivables account?
Yes, ma'am, we can.
Now, from this information, we have to prepare the receivables account, and that's very easy. Opening balance is given, that is 1447. Okay. Closing balance was also given, that was how much? That is, 1 second, 1928. And cash deducted from petty cash, that means amount received from customer is 39204. Okay. So the difference amount will be the sales amount. So sales figure is 39204 plus 1928, that is 41132. 41132 minus 1447, that makes it to 39685. Okay, so this is the amount of sales. Actually, that was the question. We have to find the amount of sales. So this is how we found the amount of sales. Okay. Closing balance plus cash received or amount received from customers minus opening balance of receivables. Okay, shall I put it in formula? Closing balance plus amount received minus opening balance. 1 second, Umaya. जाओ पढ़ लो पढ़ाई. So this is how we got the value of sales. Clear? So same way we have to find the value of purchases also in future. Okay, we will do it that also. Now, so next topic is purchase and payables. So same way, a similar relationship exists between purchase of inventory, the opening and closing balances. So three information are required to find out the purchases figure. So purchases can be also on credit. So for that we make payment to the suppliers or payables. So payment made to payables plus closing balance minus opening balance. We get the credit purchases during the year. Clear? Just like receivables. In receivables it is amount received. Here it is payments made.
Yes, ma'am.
Other part is the same. Okay? So with this information, we have to find the value of purchases. Joe's business has a payables of 3728 on 1st October. That means this is opening balance of payable. Okay. Trade payable of 2645 on 30th September. This is closing balance of payable. Payments to payable were 31479. So very simple. What we have to do, just put it in the formula payment to payables plus closing minus opening. We get the value of purchase. That is very simple. Okay. Is it clear, Umaya? Hello, Maya, are you checking it out or any doubt?
I'm checking it out.
Okay. Now we'll move to your second part. This is again cross-verified by preparing a T account and getting the balancing figure. Okay, so we got the same answer. This is a T-shape account, okay, of payables. Since payable is a liability, opening balance will come in the credit side, closing balance will come in the debit side, payments received in the debits, payments made in the debit side, we get a balancing figure called purchases. Now, Another sum is given. Emma is a sole trader who does not keep full accounting records. The following details are with regard to his business. So receivables opening is given, payables opening is given, cash received from customer is given, cash paid is given, irrecoverable debts discount, contra is given, receivables, payables, closing is given. Now, what figures should appear to purchase for purchase in Emma's statement of profit and loss? That we have to find. So only figure that is not given is purchases and sales figure. So we have to find it out. Okay. From this information. So they have asked only about purchases. So we don't need to worry about sales. So when we need to prepare this, we will prepare a T-shape account. Purchase ledger control account, they say it. So in purchase ledger control account, definitely payables. Payables opening balance is how much? 30,000. This is payables opening balance. So opening balance will come in the credit side. Payables closing balance is how much? 42,000. So 42,000 will come in the debit side. Okay. Now, cash paid to the payables, or we can say suppliers, is 151,400. That is the amount of cash paid. So that will also come in the debit side. Discount receipt, that means that is the decreasing the payment to be made to them. So that will also come in the debit side, 1,480. So that is cash paid to supplier. This is discount receipt. This is closing balance and this one is opening balance. Okay. Now, do you know the concept of contra? Contra means the same business is a payable and receivable both. Okay. So we need to make an adjustment of 1,000. When they say contra between payables and receivables ledger, that means the business is payable 1,000 to them and they need to receive also a certain amount. But whichever amount is lower amount is to be adjusted. So 1,000 is the lower amount. So contra entry will be shown in this debit side. Contra between payables and receivables ledgers. So contra means, suppose like we take example of this contra entry, like A and B are there. So A is the business, A is us, or we can say the business. So A sells to B also and purchases from B also. Okay. So suppose the amount of sales is say 2,000. Amount of purchase is say 1,000. So 1,000 will be adjusted against 2,000. So that becomes a contra sales, contra between payables and receivables ledger. So we don't need to write, or we can say write it of 1,000, and we can show that we have to make a payment of 1,000, or we have to receive a payment of 1,000 only from them. Okay.
Okay.
So 1,000 will come this side. Then we have to make a total of all this. So this side total is, debit side total is how much? 151,400 plus 1,480 plus 42,000 plus 1,000. 195,880. Same will put here, 195,880 minus 30,000 is 165,880. So that is the amount of purchases which has been asked in the sum. Okay. So this is how we'll find it out. Opening balance of payable, closing balance of payable, cash paid to supplier, discount received from them. If any contra entry is there, that is to be adjusted. We get the value of purchases. Clear?
Yes.
Is also given, so we'll put it D is the correct answer. Concept is drawing. So definitely in business, when a sole owner is doing a business, definitely he will withdraw. Drawings can be of two types, in the form of cash, in the form of goods. Okay.
Yes, ma'am.
So drawings would normally represent no particular problem at all in preparing a set of final accounts from incomplete record. Okay. Business owner may pay income into their bank account which has nothing whatever to do with the business operation. Like the business owner is depositing his personal income into the business bank account. Like owner might pay dividend income or other income from investment into the bank from stocks and shares which he owns personally. So understood, like his own personal income he is putting into business. So this particular thing will be credited to drawings. Remember, drawing is a debit account. Okay, drawing is a debit account. But when we are putting our personal state into business or personal worth into business, wealth into business, that will be credited to drawings. And sometimes the business owner may pay money out of business bank account which is for his personal expense like life insurance premium paid out of business or paying something for their family holiday out of business. So that will be treated as drawing. So that will be debited to drawing account. Okay. Concept is clear?
Yes, ma'am.
Yes, Assam is there.
Ma'am, can I drink some water and come back like in 2 minutes, 2 seconds?
I know, Maya. Fine. Yeah, definitely.
I'll be back in 2 seconds. Please, thank you. Yes, ma'am.
Yeah. So now we have to do this activity. Bob owns and manages B company, although he does not keep detailed account records. So definitely, that's the reason we are reading or understanding it in an incomplete record. All of Bob's sales are for cash. He pays certain expenses from his till. Till means lose cash. And then banks the remaining fund. So remaining fund is whatever he is receiving from sales. Okay. From that, he is like expending something and remaining is deposited into bank account. Bob maintains 1,000 float. That means always there will be 1,000 float in the till and operates with a margin of 20%. So 20% is gross profit margin. He has provided you with the following information. Purchases all on credit is 20,000. Wages for clerical assistant 100 per week. 52 weeks are there. That means total will be 5,200. 52 into 100. Stationery expense 500. So electricity expenses, banking. This much amount is deposited into bank. This is opening inventory, closing inventory. Bob is unsure of the level of drawings taken during the year, but estimates they between $60 to $90 a week. Okay. What we have to find? What were Bob's drawing during the year? So that we have to find. So definitely when it is said that they are operating at a margin of 20%. So we can understand definitely when they are saying purchases 20,000. That means purchases is 20,000, no? Yes. So So we from this information from purchases, opening inventory and cost of sales, we can find out this cost of sales figure. Cost of sales will be opening plus purchases minus closing. So opening inventory is how much? Definitely 2,000 plus purchases, that is 20,000, minus closing, that is 3,000. So cost of sales we got as 19,000. So this cost of sales will be how much? That will be 80% because they are asking gross profit on margin. So sales is 100%. So now we have to find sales figure, that is 100% figure. So that will be 19,000 divided by 80 into 100. That is 23,750. So this way we found the sales figure. Okay, 1 second. Check till this point. So sales figure is 23,750. Now everything is done on cash. So now we have to prepare a cash account and we'll come to know about the drawings because that will be the only thing missing. So when we prepare a cash account, receipts this side, payments this side. Opening balance of cash is how much? They maintain a float of 1,000. So opening is 1,000, closing will also be 1,000 because when they say float, that means always it is maintained. Sales figure, sales is the income, sales figure we got 23,750 is the amount of sales. Okay. And then all the payments. So payments are wages. Wages we found 52 weeks are there, 100 per week. That means wages are 5,200. Stationery. Stationery is 500. Electricity. Electricity is 1,200. Banking. Banking, that means rest of the amount is deposited into bank, 12,800. So all figures we got, only one figure which is unknown to us, that is drawings, which we have to find. Make a total of this, we will get drawings figure. So this is 24,750. From this 24,750, deduct all these figures. Minus 52, minus 500, minus 1,200, minus 12,800, minus 1,000. So drawings is 4,050. Okay. So this is the missing figure which we have calculated. So Bob has withdrawn 4,050 during the year. Clear? Are you able to relate to Maya? Huh?
Yes, yes.
Okay. Shall I scroll down?
Okay.
Now Next is goods drawn by the proprietor. So that is the second form of drawings. First, we have checked in the form of cash. Second is in the form of goods. So sometimes they will withdraw goods also. So in the incomplete records question, these drawings need to be included. Cash drawings, for cash drawing entries, debit drawings, credit cash. For goods, debit drawings, credit purchases. Purchases are decreasing. That's the reason we'll show it on the credit side. These purchases which we have purchased for sell in the market, we are using it for our own purpose. So that's the reason purchase is decreasing. So this is cash drawing. This is goods drawing. Okay, goods drawn by the proprietor. Always remember these are to be recorded at cost. Why? Because we are not earning any profit upon them. Na? So that will always be recorded on cost. They are taken out of purchases and not recorded against inventory. So in inventory doesn't have any role in this. They are to be taken out of purchases. Okay. One question for goods is also given. During the year ended 31st December, Peter, a sole trader, carried out the following transactions. So sales is 4,000, purchases, see, sold units is 40, purchase unit is 45, opening inventory is 5 unit, closing inventory is 8 unit. Okay. During a year, he had withdrawn 2 units for his own use. Firstly, ignoring the drawings and outline trading account would appear as, so here activity itself is given. Sales is 4,000. Cost of sales will be opening inventory plus purchases minus closing inventory. Just a second, Umayya. Just a second.
Ma'am.
Yeah, Umayya, tell me what you are saying.
I was saying that baby is crying a lot, so if you want, you can take a break too. Like, it's only 2
I
topics,
have
ma'am.
no, I've taken her. Like just one activity is there. We will be like completing the lesson, so we can do it.
Okay.
Yeah,
Are you sure you can?
yeah, definitely.
Okay, ma'am.
So during the year, he has withdrawn 2 units. Okay, that is also given in the question. So sales figure is 4,000. Cost of sales, again, right from the beginning, the same formula we are following. Opening inventory plus purchases minus closing inventory. We found cost of sales as 2520. And sales minus cost of sales is gross profit, that is 1480. Okay. Now, what they will ask next? How should the drawings of goods be treated? Okay. So for that, again, we have to solve it. Like sales was given as 4,000. Cost of sales, opening inventory 300, purchases 2700. Okay. So that is purchases. From purchases, what we have to do? We know that 2 units have been withdrawn by the proprietor for personal use.
Yes.
Okay. And 1 unit costs $60. So 2 into 60, that will be deducted from purchase. So 120 will be deducted from purchase. That's for our personal use. Okay. So cost of sales, this is opening inventory. This is purchase. From purchase, we will deduct drawings. So we ultimately get a figure of 2880. Okay. Now closing inventory will be deducted. So less closing inventory. Closing inventory is given as 480. So So 2880 minus 480 is 2400. Okay. So from 4,000, that is actually our cost of sales. Okay. So 4,000 minus 2400, 1600 is our gross profit. Okay. So here in the question they're asking how should drawings be treated. So we have shown drawings is treated in this way. That is to be deducted from purchases. And after deducting it, we get the cost of sales figure. Clear? So that is drawings, or we can say goods withdrawn for personal use, and what's the effect of it on income statement. Clear?
Yes, ma'am.
Now next thing is accounting equation. So accounting equation we already have completed it in the prior lessons. In accounting equation, what we try to show that debit is always equal to credit. Okay. So like we can write asset is equal to liabilities plus equity or capital. Okay. Now to this we can add profit and we can minus drawings. Okay. In order to just simplify, or we can say elaborate this formula or equation. So assets minus liability, we can say asset minus liability is capital plus profit minus drawings. So therefore the movement in net asset can be explained by movement in capital. So movement in capital means how capital is changing. So capital will be changing in this way, new capital introduced plus profit minus drawings. That is what we get at the end of the reporting period. So if we wish to find a missing figure, such as like if in the question they're asking of profit or they're asking of drawings, the accounting question will be closing net asset is equal to opening net asset plus capital introduced, like just this formula, capital introduced plus profit minus drawings. Or we can say, suppose profit is to be found. So profit is closing net asset, just opposite, plus drawings minus capital introduced minus opening net asset. This is, I guess, the last activity. We have to find the profit or loss. Joe, a sole trader, set up a business on 1st October 2016 with 40,000 of his own money. That means 40,000 is capital introduced. Okay. During the year, he won 50,000 on lottery and paid 30,000 of this into business. So that means 30,000 is drawings which we have, that is credited to drawings. That means just added as capital. Okay. He took cash drawings of 5,000 during the year and net asset of the business total 59,000. So what we have to find here, we need to find the profit or loss. So again, we'll put it in formula. Just above the formula is given profit is equal to closing net asset plus drawings minus capital introduced minus opening net asset. So closing net asset is how much? 59,000. Okay. 59,000 is closing net asset. Plus drawings is how much? 5,000. So plus 5,000. Minus capital introduced. Capital introduced is how much? 40,000. 40,000 at the beginning, and out of his 50,000 again he introduced 30,000. So that will also be deducted. That is also capital introduced. Okay. Minus opening net asset. So opening is how much? Opening net asset we can't get because this is the first year of the business. So that will not be there. So we can find whether it's a profit or loss. 59,000 plus 5,000, that is 61,000. 61,000 minus 70,000. 59,000 plus, sorry, it's not 61, no, sorry. 59,000 plus 5,000 is 64,000. 64,000 minus 70,000, that makes it to minus 6,000. That means the business has incurred a loss of 6,000. Okay. Clear? See, closing net asset is 59,000. Amount of drawings is 5,000. Capital introduced 40,000 and further he has introduced 30,000 out of his personal money. Okay?
Yes, ma'am.
And there's no opening net asset because this is the first year of the business. He has set up the business. Okay? So no opening net asset. Profit figure is coming in negative, that means it's a loss. So 6,000 is our loss. Clear?
Okay.
So this completes the lesson. So we're done with this lesson, Umayya.
Thank you.
Okay, Umayya, thank you so much. You can check it out again.
Yes, thank you.
Thank you.